Hi, I'm Ali Paterson and welcome to the Paytech Show. In today's episode, we look at the current state of institutional banking. As new technologies and regulations intersect, the current cross-border payments model is changing rapidly. How will banks adapt, or does the very rulebook itself need to change? With traditional financial institutions now partnering with banking-as-a-service suppliers to create an even more innovative level of solutions, the smaller institutions now also have to look at gaining access at these new payment technologies. Is the traditional correspondent banking model dead, or is it just entering a brave new world? To find out more, we brought in some stellar guests right at the heart of this industry-wide change to our digital studio. From Banking Circle, a company that not only provides solutions to other banks, but is now a bank in its own right, we have Jakob Bækkel, who heads up transaction banking there. Also joining me in the studio, I have Lloyds Bank's Gavin Maclean, the head of product payments. And from Bank of America, Paul Taylor, the head of global financial institutions. Are the traditional financial institutions now able to fulfill the ever-changing needs of its clients in this digital age?
Yeah, but we have the situation that a number of different type of banks we meet during our daily work. But if I should categorize them, I would say we have typically three types of banks. We have the small and smaller regional banks, which are typically in a situation where they have or are in the process of being de-risked, or they're losing via their global partners more and more capacity in the international space. And there is not enough evolution, there is not development from these big providers to the smaller banks. So we actually have a large segment of banks which are losing access to an international world. On the other side, we have the large international banks or the global players. They are very much hung up on the agenda of trimming their global network. They are focusing on revamping themselves. They're focusing on establishing profitability, and they're focusing a lot on a way to come back into the market, being able to develop and deliver. But they are hung up on profitability, and thereby we have this situation that they have to lose costs, and the costs can only come by losing customers, because they have tried to get rid of their legacy IT, but that legacy burden is a really big burden for these big banks. But there are some of these banks who are actually trying to do something. And then we have, unfortunately, a segment of banks who simply haven't acknowledged what is happening. That is kind of the three tiers of banks we are dealing with. I think it's very clear what the market wants. The market wants instant payments, they want quick resolution, they want effectivity, they want payments to be completely transferable. But we also need to match the regulations and the governance around payments and accounts and client relationships. The consequence of that, it's a major battle, I think, for all parties in this, especially on the backbone of the legacy. So what we are seeing is now that roughly 80% of retail banks and 74% of wholesale banks are still in a situation where they're dealing with a good old classic correspondent banking framework. But there are still more and more of them coming in with the ability to work, or the wish to work with other parties like ours. So our ability to give what the market are looking for, the experience we have and the history we have of building quick solutions to the market actually enables these banks, or some of these banks, if they come and work and partner with us, to develop and also together with us develop tailor-made solutions.
On that subject of technology in the new digital age, are traditional financial institutions like yourselves, are you still able to fulfill the changing needs of customers and clients?
Great question. Look, I think financial institutions, whether Bank of America or anyone else, we're always under pressure to meet new and emerging expectations. New and emerging expectations come in different shapes and sizes. It could be from a risk perspective. As the world this year has gone far more digital and far more online, that creates openings for cyber criminality, for phishing, for fraud, for security breaches, for ransomware. And where banks can be helpful is with their scale, with how robust they are in their security, and with the investment that they make to keep their clients safe. But banks aren't just about security. They also have terrific insight into market trends and market needs. They are data warehouses on the biggest possible scale. They have terrific insight into the transactions between different counterparties and different currency corridors and different countries. And that insight, that data, provides a level of big data, of artificial intelligence, which is hard to replicate for most companies. And then lastly, they are also key contributors in terms of innovation and investment in new technology. It's worth remembering that Bank of America is 210,000 people, of which technology and operations accounts for more than 95,000 people. That's bigger than most companies. And with that, we invest every single year, we invest around $10 billion in technology, $3 billion of which is just in technology new development. There's a scale to that which makes the bank and which makes other banks key contributors to the investment roadmap, to the technology roadmap, to what's happening in innovation. We've been awarded 4,000 patents. In the first half of this year, we were awarded 184 patents. It's more patents than we've ever been awarded in 6 months in the history of the firm. And all of those patents relate to artificial intelligence or to machine learning. And they will contribute to the industry's ability to deliver for clients. So I still think, I take your point, but I still think that traditional banks, if you like, still have a fantastic role to play in the new age as well.
With regulatory governance expanding at a steady pace and businesses increasingly becoming global, while also at the same time becoming more instant, how do you balance between regulatory compliance and the client demand and sophistication?
We are back at the legacy issue. We are back at the issue of what can you do with the systems you have today. And talking about us, I think we have been able to build systems from scratch. We have a lot of experience from the first years working only with payment gateways, payment aggregators, PSPs, and so on. That has given us an ocean of information and knowledge how to get things done. Now we are activating a new vertical, being working with banks, partnering with banks, and that is a vertical with much more regulations and governance. But we have systems where we can establish tailor-made solutions, modules, whatever they are called. Everything we have done has been built from scratch. It's up in the cloud. It is full of flexibility. It's full of scalability. And on top of that, we are applying a lot of artificial intelligence. We are applying machine learning. So when you look at all the new requirements put on us, because we now work with banks, but also working with the payment gateways, it is not a question of what we cannot do. It's much more a question of the challenge we took on us and how that actually is guaranteeing that what we're doing is the right thing. And we're meeting requirements, we're meeting the governance, but at the same time, we're delivering solutions to the clients which they like to see and which they can use. So I don't think we are walking a thin line. On the other side, I think we actually guarantee that our clients, be it banks or payment gateways and so on, that they are getting what they're looking for. I think that's the kind of the answer to that question.
Absolutely, because I mean the two are completely not mutually exclusive. There, I mean you want that's I mean you can increase increase the sophistication of what the client is demanding, whilst at the same time being on board with the regulator. And
that is clearly documented in how we have developed and over the last couple of years, the growth we have seen, but also the product development we have done, because the growth has also come because of expansions in products and solutions, but especially that we can scale, and that is exactly what we're doing today. We are listening to what the customers are asking, and we are delivering it. We are framing it in the right way. We're packaging it the right way, so we are meeting both the client requirements, but at the same time, governance and regulatory requirements.
How do you balance the thin line between regulatory compliance with the customer demand and sophistication?
Look, first, I think you're absolutely right. We've seen, as I said myself, such a fundamental tidal shift towards global in terms of our clients and their businesses, and also towards digital, driven by coronavirus. And with that, we've obviously seen that it creates the possibility for more risk. Security risk, risk of fraud, risk of phishing, risk of scams, risk of ransomware attacks. It opens the possibility. And with that, what we've seen is that our clients don't just want to have more access to digital tools or more access to do more of their business online. Increasingly, their primary concern is to be able to do so safely and securely, with a level of confidence, with a level of certainty. And for me, that's where the regulation actually gives confidence, it gives comfort. It's like that kite mark of certainty that makes you feel more confident. And so what we've seen this year is that actually being able to point to regulated status, being able to point to levels of delivery, levels of quality, which are subject to the strictest levels of interpretation, of regulation, of law, of best practice, they've actually become an advantage this year, because clients are looking for that at a very uncertain time. They're looking for that level of certainty. And in some ways, that becomes more important than being able to rush product to market and being able to be the first to be able to say that you can do something. That's still important. But actually that certainty, that stability, that reassurance becomes more important in an environment like this. And I think that's where regulation, and I think that's where regulated companies like our own, I think that's where they have a role to play.
At Lloyds, we embrace the regulatory activity as a catalyst for innovation. Combine that regulatory driver with enhancements in the technology that we're seeing and in rising customer expectations. As you mentioned, consumers typically and businesses typically want things instantly, digitally, self-served at a time that's convenient for them. So when you take that combination of factors, that acts as a great impetus to innovate and build new things. So some of our best product innovations have been built on the platform of regulatory change. And if you look ahead to some of the changes that are happening, in the UK, in Europe, and across the world, the move to structured data in the ISO 20022 messaging format, actually, as much as a regulatory change, that can be seen as a great opportunity to allow more data to travel with transactions, which helps businesses to identify them and reconcile them more easily. It allows consumers to benefit from their payments being recognised more quickly. But also, because you're using structured data, actually, you can use that to identify the good actors from the bad actors much, much better than was possible in the past. So, I think we've got to view, and we certainly at Lloyds view the innovation as a real opportunity and a real catalyst to innovate for the benefit of our customers.
I think the best banks can do today is to start work with the fintechs that has these solutions, our virtual solution where we use actually a very old-fashioned classic SWIFT network, but providing access to local payments without being there locally. That is one of the key ways where we today see we can take a client sitting in one country who got access to payments locally in another country, both payments and collections. And these solutions go from being cross-border, 5-day worst case, to suddenly become a 5-second settlement on the local clearing system. That I think is the ways banks and the fintechs can work closely together, and thereby we can actually get it. Else we will have to see banks teaming up all around SWIFT as the tool, and that's going to be very, very difficult. It's going to take a very long time because these banks cannot agree on anything in the long run. I think that's going to be very, very difficult.
How is this going to improve the convenience of cross-border and currency payments?
We will see currency payments and cross-border payments. In reality, I think we will see the ratio of cross-border payments, currency payments, multi-currency payments, whatever we call this, we will see that go down. We will see the ratio become less and less because more and more transactions, more and more payments can be settled domestically. What happened with SEPA and the way the European payment zone at that time was established and became a nearly instant settlement zone, call it today, but I think we will see more and more of that coming up. And a payment going from, why should a payment going from the US on the same internet take 5 days compared to a payment going from a neighboring country? Does it make sense?
Well, because I mean, you can send a movie file, you can download a movie file that's many gigabytes, and I mean, surely it's because of the size of the file. Because a payment file, those ones and zeros must be terabytes to take so long.
Yeah, exactly, and it's just data. Payment is just data, and that's what the banks need to understand. That's what SWIFT needs to understand. That's what we all need to understand. That as soon as we have packaged this data in a good, smooth way, and we have the access. In the case of the payment, we have the access to a local clearing in whatever country, then we can actually bring a cross-border to become a local payment. And that's the biggest differentiator of what we are doing today compared to a classic correspondent banking solution. And who won't have his payment back or his payment out same day, 10 times the cost? I don't think there's anyone who would do that.
With some of these new local payment methods, what are the key elements required for a well-regulated and accessible global payment ecosystem that can deliver instant settlement to meet the new and the traditional economies?
There are a few factors that will stand the test of time. Payments has always been a market that has driven innovation, whether it was, the ATM or faster payments just a few years ago in the UK through to, the ability to scan a check on your mobile phone rather than take it to a traditional bank branch to be processed. So I think there are some things that are permanent features of any strategy to stay relevant up to date. One is trying to keep up to date with the landscape. The second is deploying standards that travel well internationally and across borders. And the third one is to partner with the right people to help you extend your reach. So for example, at Lloyds, we already act as a partner to enable instant settlement into the UK over the payments network, one of those local payment methods that we're already there and enable instant payments. The investments that we're making in technology that is ISO 20022 native and makes fluent in the use of API technology, we'll be able to connect our customers to those instant payment services around the world. And that's the way that you meet the traditional market needs and the emerging market needs. So those staples, I think, stand the test of time in any strategy to at the front of innovation.
Let's look to the future. over the coming months, what should financial institutions focus on to ensure that they manage their operations effectively?
I won't win a Nobel Prize for saying this, and it's not the most popular thing I could ever say, but if 2020 taught us anything about the future, it's that business continuity is paramount. The ability to guarantee service, the ability to guarantee security, stability, the ability to continue with business as usual in spite of whatever shock the world throws up, actually becomes the most important thing. And of course, that's not just true from a technology perspective, it's also true from a liquidity, a credit perspective. Working with a well-capitalized institution, working with an institution that has the resources to offer some form of certainty about its ability to support you and, of course, your cash going forward, just became exponentially more important. So number one would be safety and security. Number two is flexibility, the ability to adapt. In 1 week in March, our company, which has 210,000 people, had to move 85% of its workforce to work from home. Running trading operations, running world-scale operations and technology, supporting lines of business from investment banking through to fixed income trading, through to global transaction banking, from your kitchen table, from your spare bedroom, from your home office, became the hallmark of success for this year. And we did so without dropping a single beat. But flexibility, therefore, becomes all the more important. We don't know, and I say this with every hope that we will never have another year as scary and unpredictable as this. We just don't know. So I think flexibility from a technology perspective, flexibility from a channel perspective, flexibility of connectivity, flexibility of network, flexibility of partners and the availability of partners becomes critically important. Which leads me to my third and possibly most important recommendation or observation for the future, which is partnership. Knowing who your friends are just became really important. Many companies will make a loss this year. I say that with no relish whatsoever. And in making a loss, it constrains their ability to invest in new capability or new technology or new platforms or new clients. That doesn't mean to say that those different requirements don't still exist. In fact, as we've already discussed, they just accelerated. So many companies, financial or otherwise, are trying to bridge the gap that is opening up between their ability to invest, their ability to stay current in an accelerating environment, with the reality that this year has made it all the more difficult to do so. And having a partner, having the right partner, having the right set of partners, just became all the more important from a risk perspective, from a security perspective, from a proposition delivery perspective, from a platform perspective. Partnership just became all the more vital, and knowing who your friends are may just be the most important guarantee of success for the future.
With that in mind, I've got to ask: how do you look for your partners at Bank of America? What's the what's the approach that you take?
Partnership strategy is huge for us, and of course, partners come in all shapes and sizes. We partner with some of the world's biggest technology providers. We partner with some of the world's biggest financial institutions. We partner with some of the world's most creative and most cutting-edge fintech and financial technology companies as well. Of course, each of those different partner types responds to a different need that we have. And of course, there are lots of criteria as to how we would select those. But I think we will always look to reflect the needs of our client in the way in which we go about selecting partners. Stability, world-class operations, world-class technology, world-class thinking, ability to deliver, ability to stay flexible. Those would all be key hallmarks of the way in which we choose to work with partners.
Does your bank have a clear policy on partnering with fintechs and new disrupting banks?
I don't think we have a policy, because already by saying having a policy, I think you are limiting yourselves in what you want to do. Our view is that we want to find the best solution for our customers, being it our payment gateway customers, PSP-like customers, as well as our bank customers. And if that takes us to go and partner with another fintech or partner with a bank, that's what we want to do. Yes, we are here disrupting. Yes, we are here to bring evolution and innovation to the floor. But we are not here just because we want to do that. It is the mixture of deep knowledge about how things work, plus on one side the whole market and knowledge about banking, combined with the clever people sitting in our development organization, in our IT organization, putting these things together and then partner up with different banks. We already do it today. We are in partnership with several banks, and we are with other partnership with other institutions, and we will continue that route until we find the right way to get a thing done. I think again that's a very different way to working in a classic bank, because in a classic bank you would typically hear more of the things you can't do, while we see a challenge and we see an opportunity. We want to guarantee that by the partnership we're having, we have good products and solutions. And my clients and our clients are the banks, and if we deliver good solutions to the banks, we also deliver good solutions to their customers and their clients, and they have clients they work with. And at the end of the day, it becomes a question of what we do for the global economy. So I know we would never limit ourselves in any way. But if I should add something, but we would never ever compensate on the transparency. We would never ever compensate on meeting the governance and the regulatory requirements, because that's just a must. The first time we are not meeting any of these regulations, we are out of the game. I think the winners of this game will be those who is capable of listening to the customers, is willing to take the burden upon themselves to change, are willing to follow change, are willing to listen to what is happening down between the grassroots, because that is where evolution comes from. And that is in our sector, that's the SME clients, that's the consumers. And if we can follow and make solutions available for those, it's easier also to start develop bespoke solutions for the higher verticals or sectors in banking. We need to be able to service each other. The winners will of course be the customers and the consumers, because at the end of the day, if I buy something in e-commerce, the merchant will get his money 10 times quicker if he comes in via these new smart solutions than via a classic cross-border payment, via a correspondent banking network. So at the end of the day, I would say we are all winners, but those who do not acknowledge the change coming, they will be the losers. But I prefer to look at the way we can win together, both the clients, the banks, and at the end of the day, the economy.
Well, that's all we've got time for on this episode of the Paytech Show. It is incredible to hear from such esteemed guests just how much the banking model is changing. From real-time and cross-border to decreased value in each payment, banks are having to reassess traditional revenue streams and business models. It's an exciting time to be in finance. Thanks for watching, and catch you next time. Goodbye.